Hey guys, what's popping? HitoriFX here. Welcome to the 20th episode of the weekly market outlook with TRADEXPROP. Now, in this episode, I will be covering the dollar index, EURUSD, gold, and the S&P 500. If you have any other asset classes you would like me to cover, just comment down below or join our free Discord channel and you can talk with me there. Okay, so just a reminder that we're coming into the last week of the month of August, right? So quarter 4 starting really soon, and that means that we are also going to be seeing monthly candle closures, which are very important, or even quarterly monthly closures if that's something that you look at. So keep in mind that studying closures are very important because they're going to be showing you respects or disrespects on a very macro view, like the monthly and the quarterly, and that could really lead you to have a bias for months or 3 months ahead of time if that's how you want to build your bias. Okay, but all of that aside, let's get straight into the forecast. So here we have the DXY monthly. Storyline is bullish. Okay, so we have a bullish storyline here on the DXY all the way here from this open close support. We've never really turned bearish until from then onwards in this price action, but this is where we currently are in the month. Okay, so we came up, opened, tapped this, then ran lower. So 1 week left. I'm personally not expecting us to kind of travel all the way back 3,000 points and just pass the open. So next week we could see us come down lower a bit and then retrace back, because that is normally what the final week of the monthly candle is going to be looking like. Of course, I would like us to maybe come down, tap, maybe take out this low, tap this monthly support right here with this RBS, as well as this RBS right here, tap this, and then continue higher, right? So we have this area of potential support right here. But yeah, apart from that, not much to be seen. Last week we really pushed down lower past all of these levels, but because this monthly candle hasn't closed, these supports might still be respected. Okay, we have this left shoulder, we have this traditional SNR, so we could see price retrace back higher and respect this level. And so if we do that, next month we could expect an open, low, high close into something higher. Okay, maybe into this liquidity above, or into some areas of resistance above here. Okay, so that's really what I'm seeing on the monthly as of now. Not much to be breaking down as of now because the candle hasn't closed yet. But now moving down to the weekly, we have a bit more information. All right, so weekly storyline currently is also bearish from this open close support, open close resistance right here. We formed it, came up, tapped it, breakout, and then now we are currently bearish on this time frame. So this is that monthly support that we saw previously. But breaking down last week's price action, we saw price transverse lower, breaking past this level of expected support, and then now with closure beneath it, we now see these areas of support now turn into areas of potential resistance. Okay, so we could see price come up, tap this, and continue lower for next week because we are weekly bearish and we might see price come down lower. So when you see such a large candlestick like this, especially on like the daily or the weekly, you could anticipate price to kind of have a small range candlestick next week, or for the next candle, in this case the next weekly candle, you could expect a small range candle, especially since we're so near previous week's low, we could take it and just continue higher. You know, that's just normal price action reading. We did kind of barely close beneath it. Yeah, barely close beneath it, this swing low right here. So as of next week, still bearish on the markets, but it depends on where we open as well. So if we open, trade higher, we could see price building this, come into this weekly area of flip zones right here, and then continue lower from there. Or if we continue lower straight off the bat, we could tap into this weekly area of support, this traditional SNR, and then travel higher from there. Okay, so expected areas of support, this one, weekly, monthly level, and this weekly level on the left. If we just go to the left and dissect it right here, we have this RBS, we have this traditional SNR. This isn't fresh anymore. We also have this, but this level is within of both of these, so I just chose to leave it out. But just know that we have these three levels in and around this area. So I'll be waiting for reactions to see if we come down, form a new support, and then we could trade off of that to go higher. Okay, so still favoring shorts, but I wouldn't be surprised if next week is really slow, seeing as final week of the month as well as the quarter, especially after such a big range week. We could see more of a rangy consolidated range for next week. But come up, reject down, come down, reject up, come down, reject up, come down, reject up. Okay, there's not much I want to say in terms of, you know, saying, you know, we have to react off of this level right here, because I don't know that. Nobody knows any of that, right? I'm just waiting for price. I'm giving you scenarios for you to base them off of, to see when price actually opens. You know, do we see a move higher and then a drop, or a move lower and then a reaction higher, right? I want to see price reject off of any of these areas, you know, before getting any long-term trade ideas. But this is a monthly level right here. Okay, this is a monthly level. This weekly is right above the monthly. So what that means is that we could trade lower past this, tap the monthly, and then go higher. So whenever you have a weekly level above a monthly level, just know that there's a chance that price could just ignore this and just come lower to this, because this is, in terms of the hierarchy of time frames, the monthly level is a lot more significant. So just keep that in mind when you're choosing levels. And this applies to any time frame, no, daily to weekly, H4 to daily, stuff like that. It's pretty much the same thing. All right, so it's pretty much the same thing. Just understand that when you have a level that's right above a higher time frame level, that further up level could be ignored. All right, so that's just what I want to point out. So that's the weekly for the DXY. Moving down to the daily. Okay, so we understand that you want to see price either move higher or move lower to see a reaction off of, even though I am technically leaning towards the bearish side on the weekly. But what about the daily? So daily is also still bearish. So weekly, daily in line, you should ideally be looking for shorts from weekly and daily areas of resistances, and any supports that you find, you should really only enter off of them when you have confirmations, and maybe price comes into a weekly area of support. We come up, we come down, we tap it, we form a new support, and then we tap it and we go higher after a breakout. So really, in such a large momentum bearish downwards market, you should really be only looking for longs, you know, once the daily switches to a daily bullish storyline, because that's probably when you can see price start a pullback phase before a continued move lower, or even just a move higher to start a bullish trend. Okay, so that daily bullish storyline is something you want to wait for. Okay, but here on the daily, this is that previous weekly area of resistance and that nearby area of support, and this is a high risk daily support. Okay, so this is where we currently are. This is high risk because it is, once again, it is a daily above a weekly, but basically it is this flip and this open close that engulfed this candle. Okay, so it's high risk because even though we could see price tap it and go, it's just above a weekly, so there's not much to kind of confirm and saying that we could just ignore this and just go straight lower to gravitate towards the weekly area of support. But just putting this here, that if we were to see an open low high close, right, I want to see it really come up here really quickly. So this is that nearby area and where we are. But if we were to, you know, take shorts from here, you know, we have a refined resistance right here, we have one up here, this one's a bit too far from where we are, so I'll just ignore that. So these two areas of resistances are totally valid. Okay, but if we do come down, disrespect this level, this is the next one I'm going to be looking at for potential, you know, pullback, reversal longs, but only after the daily storyline has switched to a bullish one. Okay, nothing before that. Okay, so this one just kind of disappeared. So you can kind of see just how far this level is from where we are. I wouldn't recommend you try to take longs from any of, well, there's technically no level except this one, which is fresh. So I wouldn't really recommend you trying to take this long right here just because it's kind of in the middle of nowhere, and I would rather you take longs from areas of weekly supports or at least daily supports nearby it. All right, but what about the economic calendar? What is it telling us? So here we have the one for next week. So no news Monday. Tuesday we have consumer confidence, no news Wednesday. Thursday unemployment claims, and Friday we have core PCE. So personally, from experience, let me just put this bigger, like larger. So from experience, quite frankly, unemployment claims as well as PCE, they are larger moves compared to consumer confidence. So I probably say Monday, Tuesday, Wednesday, we might see some lackluster movement in the markets for sure. And Thursday and Friday, we might see the large movers of the markets done in these 2 days. All right, so if we tap a higher time frame level and we start ranging for Monday and Wednesday, Thursday and Friday could lead the move higher or, you know, lower depending on where we currently reacted from. So really it's pairing the areas of interest that you have on the price chart alongside your time expect. If we tap up to this daily, for example, and it's Thursday, you know, maybe we took a long time Monday or Wednesday to kind of tread higher, tap this during Thursday, you could expect price to reverse lower following the alignment of time and price, tapping a higher time frame level and then waiting for the news release on Thursday and Friday. Okay, so that's something that you could use to pair your ideas with. Okay, so that is the DXY. Let's move on to the Euro USD. So monthly storyline on the Euro USD chart is bullish. Okay, so bullish from this traditional support, and then we pushed higher and we haven't really respected any of the fresh resistances above here. So coming here, really bullish, right? Hasn't closed yet, so can't really say much, but we don't really have any fresh areas of resistances on the monthly nearby. So we would need to see more price action being formed. Okay, so not much I can base things off of, just purely based off the monthly. So I will need to kind of consult the weekly for a clear review, just because we don't really have any fresh areas of resistances. It's already been tapped, as you can see right here. So I just need to wait for more price action to form on the monthly. But on the weekly, we do have a lot of fresh areas of support and resistance. Okay, so first off, storyline on the weekly is bullish alongside the monthly right here from this open close respect all the way here. Let me just zoom in, if you can see that. We tapped it right here and then we just pushed bullish, and obviously there is a storyline started from this price action right here. So monthly bullish, weekly bullish, you should be taking swing longs from weekly areas of support into monthly or weekly areas of resistances. Okay, so just recap, last week we had this big momentum candle mirroring the one that we saw on the DXY. So up and coming, we are bearish on the DXY and then bullish on the euro dollar. So for next week, the same game plan kind of applies to the euro USD. If we were to come up here and then we tap this weekly or we tap this weekly, we could anticipate price to see a pullback lower, because we have been really bullish. It is in every price action concept to kind of anticipate a pullback, maybe into this swing low to this swing high, the equilibrium, to see price push higher, or at least some pullback into some areas right here. This one's a bit risky. It's a nearby zone that I expect price to push off of. This open close respect flip, so this RBS, I expect price to come down, to come up really quickly. So this level is only really valid if we were to push from it to go higher. Okay, if we come up and come down, this zone is a zone that I wouldn't be having too much confidence in, just purely based off how high we are in the potential future price leg. Okay, so this level of support, I'll only be looking for it to be used to push price higher. If we were to come up and tap this level or this level right here, I want to see new daily resistance form, and I want to see a bearish storyline start from there to take shorts lower into maybe this will be my first target obviously, but this target right here as well. So this is a monthly and weekly support. So this one is pretty much this one right here. Okay, so it's a multi-time frame level. I don't think price is gonna tank that far for next week, but if we do have a few other key levels down beneath here. We have a lot to play from, to be fair, but I don't want to mark all of them out. I'll just let you decide which one you're gonna play off of. This big momentum candle made many of these previous areas of resistances fresh, so choose anyone you're gonna play off of by waiting for that reaction. But just know that a tip is once we form that swing high, draw a fade from this swing low to this, any of these swing highs that we just formed, and see the ones that are below equilibrium. Right, those are going to be your better price areas to trade from. Okay, so either we come down to come up or come up to come down. This one is the first actual area of support I am expecting a price to play off of, not this one. Okay, but if you break above this level with a large momentum, this is not fresh. We have this one up top. Okay, we have this left shoulder, we have this RBS, this apex right here. Okay, so it's within a 183 pip range, so still okay for EU. So waiting to see if we respect this. If not, then this, then this, and this. Okay, all right. So that's the weekly. Drop it down onto the daily. What do we see now? The storyline is bullish right here from this RBS, tap, respect, price push really high up. So we are bullish on all time frames on the EURUSD, meaning longs are going to be super high probability, okay, which is why this is super high risk. This area of resistance, this open close, is super high risk because why? It's right beneath a weekly and it's in the middle of nowhere, okay, and you are super bullish on all time frames. This is going to be barely a roadblock, but the reason I marked it out is because we could see price tap it, come down lower into areas of support to continue higher. So you could in theory take the shorts from here if we were to set up, but it's just super high risk. Okay, we have this support over here, but I'm not expecting it to be a long-term support. It's only for us to push price higher into this area of resistance and then continue lower. Okay, so you have to categorize your areas of interest into low risk, medium risk, high risk, right? So low risk areas are likely going to hold based on probability. It's just that they might not be reached as often. Okay, so if you were to purely trade off of low risk areas like these, right, you're going to be encountering a lot less losses because you're choosing your areas a lot better, and they aren't areas that are in the middle of nowhere. Okay, so this is that weekly support, and below that we have this refined SNR, this daily SNR, and this daily support, and this open close support. So this is a refinement of this. This is in the middle of nowhere. This is that weekly areas, and anything above here you could also refine it to, you know, this open close, this traditional SNR, this flip has been tapped, it's not fresh. There's something fresh up top as well. So really just this two levels right here. So knowing where to take ideas off of is really important because it will prepare you to take a loss or not. If it's high risk, obviously you would, you know, why not losing more trades, but you will be involved in more trades. You have a higher trade frequency if that's what you want, okay? And don't forget, the economic calendar is your friend, so know when the areas and timings of volatility is likely to happen, okay? So that is the EURUSD. Let's go on to the second last pair, which is gold, my favorite pair. So gold monthly candle, right here. Storyline is bullish all the way from this open close respect, and we haven't really turned bearish all the way for the past, you know, forever really. So still strong bullish on the monthly. Not much areas of respect, not much areas to keep an eye out for until this kind of closes, but as of now we are forming a potential open close support right here on the monthly, but we are at all-time highs, so this one might be a bit, you know, scary to play from, but we'll look at it when the candlestick closes. Okay, so here on gold, what is the storyline on the weekly time frame? We are also bullish, right? We're bullish from this traditional respect right here. Okay, so price formed it, and then we came down on this long wick on this candle, and then we pushed up higher. Okay, so currently we are forming some form of indecision, and we are currently at all-time highs, or really close to all-time highs at least. This candlestick literally just formed the all-time high for last week. So this reading candlesticks is important because it will allow you to know, or at least anticipate and make an educated guess on what kind of a narrative or story is being told to you just based on the formation of the candlestick. Now we are at all-time highs, and we're seeing this somewhat doji candlestick because the wicks are very long and body is very small. And when that happens, a doji candlestick is basically an indecision candle. Okay, so this is the first time gold has ever pushed past 2,500 points, dollars. And when we're seeing such a large doji candle, it might mean that we could be seeing a potential pullback from all the profit taking on top here. So people exiting their long positions, it's going to be releasing a lot of short orders into the markets, and that's going to be potentially pushing price lower. But we don't want to call tops. As always, never learn to call tops. Always wait for confirmations and then react accordingly. So weekly time frame, gold formed an open close right here, so we could use this to push price higher, making it an all-time high, because we are just really following this large bullish momentum up top here. So just really waiting to see what price does. So if we do use this to push price higher, that's fine, but if we do break this and continue lower, we do have this area of support right here, this flip, so this traditional SNR right here. So we could see price find some form of support to go higher. But do keep in mind that if we do come down all the way lower here, we might have turned bearish on the daily. But as of now, still bullish, so nothing to be wary of as of yet. So here on the daily time frame for gold, it might look a bit messy, but let me break it down for you. Here we have weekly level that we saw just now, but I also marked out a few fresh daily supports over here. So we are bullish as well from this RBS tap. Boom, bullish storyline. This is RBS. This is also an RBS. So this is high risk. This is high risk. Okay, we are above a weekly. So this is an area that you want to be really mindful of taking longs without confirmations. Alright, I would always vouch for you to wait for confirmations, especially from areas of higher risk. But coming to where we currently are, we have this open close right here on this broker on Owenda. It kind of closed above it, but on other brokers, especially my broker, we respected it. So it's a bit 50-50 right here. We barely close above it. It's broker this discrepancy that kind of leads me to have wary of that this is being respected or disrespected. So I'll just keep it here like this. But if we do disrespect it, we could see a bearish storyline start. Okay, we have been respecting this last resort right here to take shorts from. So we could see price red lower, respecting this and this as well. Okay, but if we don't do that, we could come down into this weekly area of support, as well as this fresh daily left shoulder, this area of support right here. Price may come down, tap it, and then go higher. But if we disrespect all of these levels, this is pretty much my last resort until, I mean, ideally I want to say this one. These two I would be really careful on trading from them for swing purposes. Intraday, fine, you know, intraday catch 50 pips, 100 pips, it's all good. But if you're thinking of swinging from these two levels, I advise against it. Okay, this one I'm expecting price to use it for a quick run higher before that drop, but this one's a bit more sustained. Okay, so open, low, high, close, very possible, but open, low, high, and lower could also happen because we are at all-time highs and we're showing exhaustion with this long wick and exhaustion with the respect of these areas of resistances. So we could definitely turn daily bearish from here, but I'll wait for that to happen before saying a short-term pullback has happened. Okay, so overall idea, just continue longing for gold, even though we are at all-time highs, but just follow the trend, and once it starts pulling back, then you can start to think, oh my god, maybe I should be looking for potential shorts on this asset class right now. Okay, so that is it for gold. Let's move on to our final pair, the S&P 500. So S&P 500, we are in a bullish monthly storyline from this open close right here, and we've been bullish all the way till now. So last week on this current monthly candle, we saw price have a large long wick testing of these areas of support, not this one but these ones, and then we have this large wick rejecting to the downside. So not much we can say as of now in terms of information, other than we are likely going to be retesting this current all-time highs sometime soon. Okay, this is a really long wick to play from. So moving down to the weekly, do we support the notion of the monthly traveling higher? Yes, we do. We are in a weekly bullish storyline from this traditional support respect right here. So we tap that, pushed higher, and we also broke past all of the projected areas of resistances right here. This one is this open close. Okay, so we broke past all these levels, so we could see price do an open low high close next week, taking all-time highs, and whatever that it does here, it does. Okay, but for now I'm still expecting longs and expecting price to make an all-time high, because we have not respected the last resort right here. So we could ideally, I don't want price to pull back too low. If we're to take out all-time highs, I want price to do a really quick sweep and then a potential move lower. Okay, that's what I want to see price do if we're to come up to retest this all-time high. Okay, so we have this flip, this also flip, this also flip. So multiple areas of weekly supports we could see price come down to, but let's refine them on the daily. So on the daily, we are actually in a bearish daily storyline. From this flip respect, we turn daily bearish right here. So we have this last support right here. You could tap it and see price come down lower from this area right here. But as of now, we are still going to be looking for longs. Even though daily is bearish, I understand that daily is bearish, but weekly, monthly is bullish. So when you have two higher time frames that are in line like that, the daily really doesn't mean much. Okay, unless the weekly turns bearish, then I'll be like, oh my god, we could be seeing a potential move lower from here. But as of now, still bullish on higher time frame levels, so we could take longs. Okay, so last week we were kind of caught in a range right here. So I would likely want to see price come down, tap this or this area of support. So this is a traditional support, this is a left shoulder, so resistance, breaks becomes support, breaks becomes resistance, breaks once again becomes support. So if this gets broken again, I'm ignoring it completely, right? I want to look at this. So either this or this is what I want to see. This one is still within the weekly support, so it's fine. So technically this is also valid, but I don't really want to see price come down into this area of weekly support, because like I said, I want price to be lightning quick in taking out all-time highs. Okay, I don't want price to start moving around, forming new price action, because if you look at past data, whenever we see price doing that near an all-time high, it's a sign that we might not be seeing a new all-time high anymore. Okay, so if we were to take out this high right here, I want to be quick, right? So the nearby areas of support, this one's also one. I want to see price tag them and then go higher. Okay, so yeah, that's pretty much it for you know, this week's outlook, everything's pretty much approaching all-time highs for the S&P 500, EURUSD super strong, DXY expecting a big drop. I'm not sure where we will see a reversal to go long from, so you should be taking shorts on the DXY and longs on the euro dollar until proven otherwise. Gold, you know, we might be seeing a range, but seeing as how we are nearby all-time highs, I would like to see see the markets kind of give me more of an information before considering an actual, you know, solid swing bias per se. Intraday is fine. Intraday, the good thing about intraday trading is as long as you don't over leverage and you don't over risk, you can be very, very nimble and flexible, and you will have an abundance of trade ideas and frequency. Okay, and you can be more reactive instead of predictive because you're trading off of a low enough time frame for you to be nimble. If you're swing trading, you really have to wait for, you know, for price to align with your predictions, and that requires you to trade more than one or two pairs to have enough of a trade frequency month in, month out to actually make you know, consistent returns in some form of way. And I'm not trying to promote you to overtrade or switch to day trading. I'm just saying that as a trader trying to find footing in the markets, you kind of need to grow your capital or your portfolio, and that normally includes either a higher trade frequency or higher risk per trade. It depends on what trading style that you have. Okay, for more seasoned and experienced and veteran traders with their own capital, with their own portfolio, they can take it slow because they have already gone through the process of building their, you know, trading empire per se. So either way, you know, doesn't matter if you're seasoned or new to the markets, you should always manage risk. And what better way to manage risk than utilizing our funded accounts? Okay, so grab one of yours now for a very, very competitive price at our website TRADEXPROP.com. Okay, and yeah, you know, I'll see you guys soon. Take care. Bye bye.